CEO of MELD. MELD is a very, very, very interesting DeFi play. Ken and MELD are part of the ISIN certificate as well that Louis was mentioning earlier. And Louis, if you're around, love to have you back as well, since we're in our last part of the session. Tying to what you were saying, Guido, like if I heard right, like you've laid out this infrastructure, and now for the ecosystem, you're starting to connect the pieces, right? And obviously DeFi is one big part of that. And I know from past conversations that's something that you guys are involved in as well. And that's why I wanted to bring Ken into this conversation. Ken, in many ways, like when I listen to Guido and I look at Seba, I think, oh, the mainstreaming of what has otherwise been kind of like this little upstart world, right? And to me, that just becomes so critically important. And in many ways, in our conversations and having you involved, it feels a lot like your approach is the mainstreaming of DeFi. You are about how you tie this into the language and the accessibility for the average person as well. So very quickly, if you can tell us what MELD is and the vision for MELD, and I do want to connect you and Guido as well.
Sure.
Some specific questions for you.
Yeah, so MELD is a lending and borrowing protocol on DeFi. So my background comes from the DeFi space and the DeFi principles of decentralization, non-custodial, and trustless. And so what I was seeing when the bull market was coming in, a lot of my colleagues were getting their portfolios were swelling. And as they swelled, they were putting more and more money into them, and they were becoming more fiat poor and crypto rich. And so what we wanted to do is we wanted to be able to unlock some of that value in the crypto and give that back to them in fiat without reducing their long positions in crypto and without incurring a tax event at this point in time. So it's a very simple or very sort of principled idea. We wanted to do it in a non-custodial way because a lot of these people, they weren't able to get into a BlockFi or a Celsius because of them not being Americans or wherever they live or whatever their situation. They couldn't pass KYC. They could pass KYC for France or for Norway. They couldn't pass it for the US. And so we saw this as an opportunity to do that. And as we sort of rolled this out, then we saw that there were other services that were needed in order to make that possible. And so we put those together, things like stable coins and bringing over liquidity from other blockchains. So we see ourselves as kind of a layer 2 to all of the blockchain environments. We're on Cardano, but we want to play nice with Bitcoin and Ethereum and the others. So we see it from more of a, more of a mainstream perspective where each blockchain is essentially a liquidity pool. And we're drawing upon this liquidity to provide these, it's very simple to call them lending and borrowing, but when you look at them in more simple or more sort of sophisticated terms, they actually cover a lot of what the sort of banking world or the financial world typically does. And so this is what we're working with.
That's very cool. And, again, like I said, when you came on, we've been so excited about what you guys are doing. And I just love that connection. This is what we're all about, SVBS and all of our initiatives. We need to get to, as much of mainstream product, mainstream conversation, mainstream access, and tying that even back to the work that Robert does, right? I mean, as long as you remain absolutely at the tertiary, at the borders of everything, you're not going to be taken as seriously when it comes to influence, when it comes to why regulatory frameworks have to move in a particular direction. Ken, you probably look at, you've probably heard about Seba before, and you look at what
sure.
Just shared. And I mean, does that sound like? To me, it sounds like a lot of the infrastructure that you're going to need to enable some of your vision. People like Guido are building out on the bottom up, anyways, right?
Yeah, I mean, the approach that we have is kind of creating a Chinese wall between crypto and the fiat world, and the fiat world means banks. So we've never taken a kind of an aggressive approach towards the financial world or traditional finance. We've never taken an aggressive approach towards other blockchains. We think of it as more, the more inclusive we can be, the better the product we can create. Our principles are much more about things like capital efficiency and non-custodial than they are about, banks are bad or, this is good. And so it's going to take some time. It's going to take, some effort and some work in order to thaw this out. But this is how we're trying to approach everything. This is how we're going to approach the US market. We're starting out outside of the United States. So 63% of all crypto investors are outside of the US. So we have a lot of people we can work with. And then once we have become a bit more mature, then we'll be in a position to engage Treasury and the SEC on better terms. We'll have history, so we can have a dialogue with them rather than being this real kind of, upstart, know nothing about us kind of thing, which is going to it's going to lead to a lot of risk conversations. And so this is the beauty of DeFi. DeFi has vicious innovation in the financial space. And this is what brought me to it. The fact that you can invent something and launch it super quickly, and you can get all that experience and you can work in the space. It allows for so much unique thinking. And this just fires me up. I've told you this before. Finance is by far the most creative industry in the world. And if you think of it from that perspective, there's a lot that can be done, but not from this kind of aggressive perspective or this kind of very, us and them kind of attitude.
Oh, I agree completely, right? I've said this multiple times, for us, we think disruption is a collaboration sport. And I think that, you and Guido certainly, are great examples of embodying that. You've had some very interesting success with a model that I want you to share both what you did with what is known as the ISPO, the initial stage offering on Cardano, and just unlock a little bit of the mechanics of it.
Sure. So we've created what's called an ISPO, or we've executed on what's called an ISPO, initial stake pool offering. So with the advent of proof of stake blockchains, you have the ability to stake your tokens on one of the nodes of the network as a way of guaranteeing the security. So you have skin in the game on that node, which means that the network can trust it more because you have more to lose. Simple principle. So we chose Cardano, which is a very mature technology when it comes to proof of stake. And in our early stages, when we were working on our tokenomics, I was listening to some podcasts about community reaction against unfair launches. So everybody was talking about how, you would launch your asset, you would launch your token, and then bots would buy it up in 30 seconds and no one would get access to it. They would pump the price and you get these J curves and all this kind of stuff. And so I really wanted to be able to try and fix that problem. I wanted to avoid this idea of, either only institutional investors get hold of it or bots get a hold of it and no one really gets access to it. And so I looked towards the technology that existed already, the sort of infrastructure, which was the stake pool. And so what we created was this, well, we didn't create it, what we utilized was the staking mechanic that is on Cardano, where people can stake their ADA into our staking pools, which secures the network. So it has a formal function. It's not an investment. It has a formal function to secure the network. And with that, we're able to earn what are the block rewards. So we earn ADA from those staking. And then in exchange for that at a fixed rate, we then airdrop the MELD tokens as rewards for people being part of that stake pool. So we didn't know whether this was going to work. When I thought of it, I thought that I had come up with this idea. So I was very, very proud of myself. And then my CTO told me, no, you didn't come up with this. It's been talked about for many months, but it had never been executed, never been done. So we launched it on July 1st and we raised 100 million ADA, which at the time was around $150 million. in the first 24 hours. Now that raise is a bit of a misleading term. We didn't actually raise the money. It's money that is staked in our stake pools. The stake pools, the crypto is not actually transferred to the stake pools. So there is no formal risk outside of third-party risk. So we're not in control of their keys or anything like this. So it's a very safe way for people to be able to do this. They can pull their crypto out at any time. So this is very good for us, which means that based on our behavior, our community can vote on us. If we're doing a good job, then they'll stake. If we're doing a bad job, then they'll remove their stake and we get penalized for it. And so we can't run off with the money or anything like that because we don't have access to it. We don't have the keys. And so we thought this was a very good balance between the use of the technology and very, very high levels of community engagement. And so to date, we're just about 2.5 months in, and we have around 323 million ADA staked, which comes to around 800 million US dollars that is in the stake pools. So it's been overwhelming. We did not expect this to be the case. And we're super happy that the community has engaged in it. And right now what we're doing is we're building a playbook based on our sort of successes and failures, so we can give back to the community so other projects can do something similar.
That's awesome. Like, you know, and you explained it so beautifully as well. So, you know, appreciate having you talk through it. You know, quick kind of connection point to all of you. I mean, starting with you, Louis, you know, I hope you see the kind of companies that you have in your actively managed certificate. I mean, this is a great story and great progress in just the last 2 months. And hopefully your investors and future investors can get to hear and see the story. That excites you, I'm sure.
Yeah, it absolutely excites me. I met with Ken in Zug a couple of months ago. That was just about when you started the ISPO, and you're quite excited about it. I initially had some problems to understand it, but I quickly got into it. And when it started, you said in 24 hours, 150 million in ADA. That's unbelievable. And I mean, as you're running that node, the returns are quite impressive as well. I can imagine. So that's an amazing kickstart for MELD, and not only like getting profit out of it. As you said, the learning process is great. It's actually engaging the community. I think 14,000 plus, or almost 40,000 people staked with you. So they will remain with you, I assume, because you're doing a good job for now. And those are the future customers of your platform, right? So I'm very positive on what you do, and congratulations on that.
Thanks.
Yeah, awesome. And Robert, I want to turn to you very quickly. You know, the approach of you know, how this is not investment, you know, how people are getting an opportunity to provide critical services, you know, for a proof of stake system to work and be able to, you know, earn income for that. And as far as MELD is concerned, a clear model of how this is revenue, which, by the way, you know, is kind of cool, right? As much as, you know, everyone is focused on look, you know, how much capital we brought in, and that's all critical. And, you know, obviously we're part of that process. The fact that this is revenue, and you've created a revenue model this early on, one that you have to work to service. It's not magical. You know, I think that's fantastic. Robert, I want to quickly turn to you. Like, does that help in the story of, hey, what DeFi can actually do and how we can construct from a regulatory standpoint?
I think it's definitely very, very helpful to show any technical use case. Like, hey, this is able to raise money. It's providing capital access to people who normally would be cut out of traditional means from an institutional perspective. At the same time, I think these innovative DeFi platforms are a basis for why we need a new regulatory framework for digital assets, especially in the United States. A lot of our traditional frameworks are relying on 60 to 70-year-old court cases determining what is not a security, and that determines disclosure requirements and a whole number of things. And digital assets, they have the ability to be traded and gain in value, but at the same time, they serve very functional tasks as well. So it puts them in between a security and a commodity. And that's one thing that we're looking at in DC is how to establish a framework that will allow these types of platforms to be able to launch in the United States, to provide US investors the ability to be in and on the ground floor without getting around restrictions placed by their locality.
Yeah, and at the end of the day, this is what MELD wants to do. This is what wants to do with the actively managed certificate. And I know for a fact, listening to you, Guido, that this is what you want to do. So we, everyone on screen doing these incredible things wants to bring, their offerings, their structure, all of these years of really great work. Ken, in your case, even months of great work, to US investors. And we know from our side, US investors are, want to play and want a part to play. And Ken, for, perhaps another time, one of our investors and amazing partners, Jim Mary, was very curious, because of the work that you're doing on the Cardano side, you've got maybe some insight into kind of this conversation around what you think of the evolving Cardano smart contract framework, where that's going. And if you have a quick comment, we'd love to have it. And if not yet, that's totally fine too.
No, I think that Cardano as a blockchain that's coming up, it has a very unique position in the sense that it's the third largest blockchain in regards to market cap, but it has yet to have much in the way of functionality. And this is the reason why we chose it, because it provides us with this opportunity. That opportunity comes with a responsibility as well to sort of continue to build on it and continue to participate in the community. If you do a good job with that, then you can actually tap into this huge sort of untapped base of liquidity. And I think that we're on our way there, but it's not there yet. We still have a long way to go when it comes to smart contracts.
Which is fine. We're on this journey. But our end game is all the same collectively.